Okay, so 3 years ago, my finances weren't exactly, picture perfect.
Right.
If you're feeling like your money isn't, working as hard as it could be,
Yeah.
well, trust me, I've been there.
Okay.
But fast forward to today,
Yeah.
my portfolio is actually worth over $2.3 million.
Oh.
It sounds like a huge leap. I know, but it does. The thing is, it all started from a place that I think a lot of you listening will find surprisingly relatable.
I think what's so fascinating about these stories is that, when people hear about these big financial successes,
Right.
they often assume there's some secret or some massive advantage.
Exactly.
But the material we're diving into today is really interesting.
Yeah.
It's this one person's journey.
Mm-hmm.
They've called it their blueprint to millions.
Okay.
And what it really suggests is that it's not about where you start. It's more about the strategies you use
Right.
and how consistently you follow them.
I think that's a really important point. And this blueprint that we're looking at, it details their specific steps that they took to build their wealth.
Okay.
So what we're going to do in this deep dive is extract those core actionable principles from their story.
Yeah.
So think of this as your shortcut to understanding what really moved the needle for them and how you can apply those same principles to your own financial journey.
Absolutely.
We're going to try to cut through the noise and get to the essential strategies that anyone can use to build a more secure financial future for themselves.
What I find so interesting about this blueprint is that it emphasizes this long-term structured approach.
Yeah.
It's not about chasing trends or getting rich quick schemes.
No.
It's about building a system.
Right. And at the heart of that system is what they call the 3-pillar system.
Okay.
Now, this isn't some complicated Wall Street jargon.
Right.
It's actually a pretty straightforward way to think about investing.
I see.
And how different types of investments work together.
What's interesting about the 3-pillar approach is that it aims to create this balanced portfolio.
Yeah.
By spreading your investments across different levels of risk and potential return.
Exactly.
It's not a one-size-fits-all, but it's a great framework for thinking about diversification.
Exactly. So the first pillar is what they call the wealth accelerator.
Okay.
And this is where they allocate the majority of their portfolio,
Got it.
about 60%. And the key here is index funds.
Okay.
The idea is to tap into the overall growth of the market over time.
Makes sense.
This is like the steady engine of your wealth building journey.
That makes a lot of sense.
Yeah.
I mean, index funds are designed to track the performance of a specific market index.
Exactly.
Like the S&P 500.
Right.
And because they're broadly diversified and typically have lower expense ratios, which are those annual fees, they're a really efficient way to participate in that long-term market growth.
Exactly.
Without having to constantly pick individual winners.
Yeah, you don't have to be, stock picking genius to benefit from the growth of the market.
They're like the trunk of a healthy financial tree.
I like that.
Solid, supportive.
Yeah.
Providing that consistent growth.
Okay, so then we move on to pillar number 2.
Okay.
The growth engine.
All right.
Now, this is where things get a little bit more exciting.
Yep.
This pillar is all about individual stocks that have the potential for significant growth.
Okay.
So we could be talking about stocks that could double, triple,
Wow.
even go up 5 or 10 times in value over time.
That's the dream.
And according to the blueprint, this growth engine was actually instrumental in helping them reach that first $1 million.
So this brings up a really important point.
Yeah.
About the balance between risk and reward.
Of course.
While those individual stocks can have huge upside potential, they also come with more volatility than those broad market index funds.
Exactly.
So this pillar requires more risk and a higher tolerance for those market swings.
Absolutely. It's not just about picking any stock. You have to do your homework.
Right. You have to understand the business, their potential, their industry.
You might look at their business model.
Exactly.
Their financial health. How do they compare to their competitors?
All of that.
Okay, so then we have pillar number 3. The
The
cash machine.
Okay.
This one is all about generating that regular monthly income.
Got it.
So these are investments that pay you consistently.
Right.
Provide that steady stream of cash flow.
I see.
The goal here, as it was in the blueprint, is to generate enough passive income to eventually have the option to leave your job.
That's the dream.
So this pillar often includes things like dividend-paying stocks
Okay.
Shares in companies that pay out a portion of their profits to shareholders regularly.
Right.
Or things like REITs.
REITs.
Which are real estate investment trusts.
So those are companies that own and operate income-producing real estate.
Exactly. And they often pay out a large portion of their profits as dividends.
I see.
So the appeal here is that consistent income stream that can help you supplement or even replace your earned income over time.
Okay, so what's the key insight here?
The big takeaway is that it's the combination of all three of these pillars
Working together
that makes this system so effective.
Right.
They emphasize in the blueprint that a lot of people focus too heavily on just one area. Maybe they're just chasing high-growth stocks.
Right.
Or they're only focused on getting that immediate income.
Yeah.
But the magic really happens when you have all three working together.
That makes sense.
You know, that balance between growth, stability, and income.
I mean, that multifaceted approach just makes a lot of sense.
Right.
By having exposure to different asset classes.
Exactly.
And investment strategies.
Right.
You're not putting all your eggs in one basket.
Exactly.
You're creating a more resilient portfolio that can handle different economic conditions.
Right. So we've got the three-pillar system covered.
Okay.
Now let's talk about the practical side of things.
Right.
The actual habits that help this person build their wealth.
Yep.
The blueprint calls these million-dollar routines.
Million-dollar routines.
Which might sound a little intimidating.
Yeah.
But really it just comes down to simple, consistent actions.
I like
performed regularly.
What's so fascinating here
Yeah.
is that they emphasize this power of compounding.
Right.
Not just with investment returns,
Yeah.
but with knowledge and consistent effort.
Exactly. So those small daily and monthly habits,
Yeah.
when you maintain them over time, can lead to really significant results.
Powerful concept.
So first up is the daily morning routine.
Okay.
Apparently, they start every day at 6, 4, 1 a.m.
Wow.
with 3 key steps.
Let's lay it on me.
The first is scanning for 52-week lows.
Okay.
Now, this is about identifying companies,
Right.
good businesses are trading at a lower price.
Than they have been in the past year.
Exactly.
Now, a 52-week low doesn't automatically mean it's a bargain.
Right. It's a starting point.
It's a flag.
It's a signal to dig a little deeper
Yeah.
and see if there's a real opportunity there.
This is a classic value investing principle.
Right.
Looking for those situations where the market has maybe temporarily mispriced something.
Exactly.
And by identifying those companies trading at their 52-week low,
right.
You're starting that process of investigating. Is this price drop justified, or is this a buying opportunity?
Checking in the morning routine is checking dividend announcements.
So this supports that cash machine pillar.
Exactly.
They're actively looking for opportunities to boost that income.
Right. It's not just about passively holding dividend stocks. It's about actively seeking out ways to increase that income stream.
So it's a more proactive approach.
Exactly.
To income generation.
Okay. And the third daily habit is reviewing the financials of one company.
Just one.
Just one every single day. The idea here is that this consistent focus effort really helps you build a deeper understanding of different businesses.
Like compound interest.
Exactly. It's compound interest for your financial knowledge.
I love that.
Okay, so now let's talk about the crucial monthly habit. This one is a game changer.
Okay.
On the first Monday of every month, 20% of every paycheck is automatically transferred to investment accounts.
Before anything else.
Before any other spending happens.
That's key.
And according to the blueprint, this single habit contributed to 70% of their overall wealth accumulation.
That's incredible.
It's like setting your finances on autopilot.
It's removing that temptation to skip it or put it off.
The pay yourself first principle in action.
Exactly. And automating it, make sure it happens no matter what.
Okay, so we've covered the foundation, we've covered the routines.
Right.
Now for the part I think everyone's really curious about, the specific investments.
Let's get into it.
That really made a difference.
What were the big winners?
The blueprint highlights 5 key investments that played a major role in their journey.
I think looking at real-world examples can help make these concepts a lot more tangible.
Absolutely. So first up, they call this one the boring ETF.
Boring ETS.
Which is VOO.
ZOO.
This is like the bedrock of the portfolio.
Okay.
Aligning perfectly with that wealth accelerator pillar.
Right.
VOO is an exchange-traded fund.
Yes.
That tracks the S&P 500.
I see.
So it gives you exposure to a wide range of large U.S. companies.
Instant diversification.
Exactly.
And relatively low risk.
And the reason they call it boring is because it's reliable.
It's consistent.
It's that slow and steady growth without having to be actively managing it. Or worrying about the volatility of individual stocks.
It just kind of chugs along in the background.
Okay, next we have what they call the moonshot.
Okay.
Which was their investment in Amazon. Back in 2015.
Wow. So they got in early.
This is a perfect example of that growth engine pillar. You know, getting in on a company like Amazon.
At that stage.
Early stage.
Could lead to some serious returns.
Absolutely.
But it's important to remember. Not every growth stock is going to be the next Amazon.
It's about doing your research.
Exactly.
And diversifying even within that growth portion of your portfolio.
Okay, what's next?
All right, then we have the dividend beast.
Dividend beast.
Okay, which is the ticker symbol for Realty Income.
Realty Income.
This is a classic cash machine investment.
Right.
Realty Income is a REIT that has a long history of paying consistent dividends.
That's great.
They're known for their monthly dividends.
Really?
Yeah.
So they pay out every single month.
So this really demonstrates the power of dividend income.
For building wealth over time.
Okay. Investment number 4.
All right.
This one is called the contrarian play.
Contrarian play.
This was their decision to buy Disney during the COVID-19 pandemic.
Oh, wow. So they were buying when everyone else was selling?
Exactly. They saw it as a temporary setback for a fundamentally strong company.
It's about having that long-term vision.
Yes.
Even when things look bleak in the short term.
Right. They saw an opportunity.
And it takes a certain level of conviction to do that.
Okay. And then finally, investment number 5. They call this one the secret weapon.
Okay. The secret weapon.
And this one is not a stock or a bond.
What is it?
It's investing in yourself.
Investing in yourself. Okay.
Through financial education.
Oh, that's interesting.
Reading books, taking courses. And they emphasize that this has a huge return on investment.
Because it gives you the knowledge.
Exactly.
And the skills to make better decisions.
They even say it has like 100x return.
Wow.
So that's pretty powerful.
That's huge.
All right. So we've looked at the foundation, the routines, some of the key investments. But this blueprint wouldn't be complete without a plan to get started.
Of course not. You've got to give people a place to begin.
Exactly. So they have this 90-day millionaire starter plan.
90-day millionaire starter plan.
Now, the millionaire part might be a little ambitious.
Yeah. Within 90 days, that's a tall order.
For most people, but the actions they recommend are really valuable, regardless of your goals.
I think it's important to manage expectations. When you see claims like that.
Of course.
But the real value here is building those habits.
And building that momentum.
Exactly.
So month 1 is all about the basics.
What are the basics?
Open a brokerage account.
Okay.
Which is way easier than people think.
Yeah, these days it's so simple.
And then set up automated investments of just $50 a week.
$50 a week, that's manageable.
It's about lowering that barrier to entry.
And just getting started.
And building that habit of consistency.
Automating it right from the beginning is a really smart move.
Okay, month 2.
All right, month 2, what do we do?
We're building on that foundation.
Okay.
And investing in your first index fund.
Okay.
This is that wealth accelerator pillar in action.
It gives you that broad market exposure.
Yeah, instant diversification.
Like from the start.
And then in month 3.
Okay, month 3.
You add 1 growth stock and 1 dividend stock.
All right, so now we're bringing in the other 2 pillars.
Exactly.
In a manageable way.
You're starting to diversify your approach.
And learn about different investment styles.
And this is where they make that bold claim.
Okay.
They say that by day 91, by taking these steps consistently, you could have more wealth than 90% of people.
Now, I think that statistic might vary.
Of course.
Depending on a lot of factors.
But the underlying message is powerful.
It is.
Taking action, even small, consistent action,
puts you on that path
towards building wealth
that most people never even start.
Exactly.
The real win here is establishing those habits.
Okay, so as we wrap up this deep dive into this blueprint to millions, what's the key takeaway for our listeners?
What do we want them to remember?
It's this building wealth is not some exclusive club.
Right.
It's accessible to everyone.
Regardless of your background.
Your income.
Your education.
The real secret is getting started.
And being consistent.
And that's what this blueprint shows us.
It demystifies investing.
Yeah.
Shows that building a secure financial future is possible.
It's about having a system.
And sticking to it.
Not about getting lucky.
It's about those habits.
And letting the power of compounding do its work.
Over the long term.
So here's a final thought for you.
Okay.
We can't change the past.
Right.
But we can take control of the present.
This moment.
This moment is the next best opportunity.
To start building the future you want.
So what is one small, actionable step
that you can take
today,
right now,
to start building your own path?
The financial freedom.
Think about that.